Hello, good afternoon to everyone. Thank you to Kallanish for the opportunity to share the thoughts and view from Eurometal on the current circumstances. Just first to talk to the audience, Eurometal is the Federation of Steel Tubes and Metal Distributors and also Tradings. It's an organization with 50 years, more than 50 years of history, 75 years of history, and well, it's a non-profit association and based in Basel. Okay, the reason that we were asked to give our view is to talk about how the distribution point of view is facing the current circumstances in the European market. Well, one of the things that Eurometal does is provide information and statistics about the market evolution based on information collected in a compliant way from our different associate members. And if we compare, we look at the statistics, what has happened in the 9 months running from January to September 2021, we can see that the business, compared to the same months of last year, is behaving pretty well. So we can see that Profiles business have grown almost 5%. The merchant bars have not reduced. In the rebars business, there has been a movement down of -5.4%, which gives the distribution of long steel products at a pace of 1%. If we move into the flat business, the average growth has been close to 13%, with very high representativity of hot rolled coils, the cold rolled coils, and also the rolling plates. Well, not to forget the galvanized, which also have a 9% growth. For the rest of the products, well, amazing the behavior of the stainless steel market, the tubular, the tubes, the tubular products and other alloys. So in general, the market between January and September 2021 compared to January September 2020 has grown 9%. Well, we could be an external observer could be delighted seeing these figures, but we have to compare that. This is related to the time of the lockdown of the activity in Europe between March and May, in some countries even June last year due to the COVID. So is this growth as representative as it looks? So if we look at what has happened in the month basis, so what happened in September 21 compared to September 20th, or in September 21 compared to the month before, then, which is the chart that we are seeing on the screen right now, then the difference is, or the information that we get from the statistics are different. In the case of the long business, okay, it's good, because compared September 20 to September 21, the growth has been 10%, and we have to take into account that in September 20, the stock position was almost recovered, but we see that in the month of September 21, there's been hardly any growth compared to August, which is a holiday month for a good part of the European Union. If we move to the flat business, then we can see that the growth in September 21 compared to September 20 has been 7%. So if we look at the different products, there has been a growth, a massive growth of hot rolled coils. But for the rest, we can see that the growth is not that much. And what is worrying is what happened in the month of September compared to August, to the month before. And then we can see that the market was weakening already. For the rest of the products, if we look at other steel products, the tubes, -5%. The stainless that we saw an amazing growth when comparing the whole of the period, the 9 months, just 1 month to 1 month, September 20 to September 21, it's a -15%. So we start to see that here something is happening in terms of growth. So we move to the next slide. And what we can see here are what are the elements behind the market slowdown. Well, what have we seen? First is that there is this semiconductor crisis in automotive, which is translated to less demand. There is the traditional decrease of activity after the summer break, which is also less demand. But we start to see that there is a cash constraint in some of our customers to keep the stock levels due to the price increases. And this is also reducing the apparent demand. So in a market that is so volatile or so sensible to the movements between the offer and demand curves, we can see that there is a reduction in the demand based on these three elements, at least, because later we will see some more. This initial lower demand is also affecting the scrap price. So the scrap price is being reduced because there is less demand. And the reduction of the scrap price is also affecting the competitiveness of the electrical furnaces, because it's increasing the competitiveness, so it's allowing them eventually to reduce the prices in order to keep on supplying the market. We can see also in the EU that some producers that have not been supplying big volumes to the EU have had local problems in terms of local consumption. We saw the problem in the springtime with India in the case of flats. The COVID the pandemic affected massively the Indian market. So the Indian steel mills were focusing on exporting in order to keep their production ratios. And that has increased the offer. And the price movements also affected the apparent demand, lowering the apparent demand. So again, another factor to reduce the demand. And when the market starts thinking about what is going to be the next movement, and now again, the self-fulfilling prophecies apply. So the market is expecting the prices to go down. And as the market expects the prices to go down, they refrain from buying, and the lack of demand forces the mills to reduce the prices in order to keep the production flowing, especially those who do have problems in order to stop the lines. For example, the basic oxygen lines. So we move to the next. What are the challenges that today we are facing? The first one is what is going to be the impact of the trade barriers. We have seen many quotas for different countries being saturated and fulfilled in a very short period of time in different quarters. So in the month of July, the 1st of July, the material, the hot roll imported from India was saturated in a scale that nobody was expecting. We have seen the same thing with material coming from Turkey in the month of October. And this is introducing a lot of uncertainties to the market. The latest agreement with the US and the EU 27 for the quotas of the different products helps to remove 3 million tons from the European market into the US market. What will be the effect in prices of that trade flow moving into the Western market of the EU 27 is still unknown. There are a lot of uncertainties also about what are the stock levels in the European ports, and the different players need to make a guess and a calculation of what is the duty that they will have to pay if they decided to take the import, or if they decide to wait for the additional quarter. Also, let's take into account that the April to June quarter of 2021 is a reset quarter, where all the quotas that were not fulfilled previously will be allowed to the market. So, and one thing that is important that will drive the prices for all the steel business in Europe is what will be the recovery of the automotive industry, which is linked, as we mentioned in the beginning, to the semiconductor shortage. But if the automotive wakes up, then we will have an increase in the demand that is going to be very quick, that will have translation very quickly also to the scrap prices, and from the scrap prices it will be contaminated or passed to some other markets as the long business, which is not massively in the automotive business. There are production cuts in Europe, but as I mentioned before, the basic oxygen lines have very difficult to reduce the production, so they need to keep on producing, and this flow is going to make it, it's making it very difficult to assess what the movements will be. And then in the forward view, we cannot forget two elements and have to be massively taken into account. The demand by customers for the green steel. All of us need to build a plan in how are we going to deliver lower CO2 steel to our customers, and a very complicated issue behind, which is the carbon border adjustment mechanism that the European Union is going to start testing very soon, in less than 1 year and a half, and that will generate distortions into the market. As a summary, we can say that it's not going to be an easy time. These are not being easy time. I think the concerns and the worries in the distribution sector are higher than ever before. It's not about the price spike that we saw in 2021. It's much farther, because at this moment in time in the distribution, there are too many elements to be taken into account to understand and to guess where the movement of the prices is going to be. And because of the added value with which the business works, it's going to be extremely complicated for all of us to take the decisions in the coming weeks. What are the drivers that might affect the prices for 2021? Well, as I mentioned, the automotive demand and the speed of the recovery of the automotive demand have to be taken. The trade flows towards the USA that will reduce eventually the EU local offer. What is going to be the internal demand from countries like India, especially China, because that might divert flows from other Eastern producers into the European Union. What is the impact of China in supply chains which are not related exclusively to steel? Of course, steel, but also what is happening with the freights, with the sea freight, the crisis with the magnesium, and so on. And what will be the influence of the scrap price because of the link between the scrap price and the long business? This is it's going to be a key element also for the beginning of 2022. And some clarification is what are going to be the mill surcharges. We are seeing some of the flat mills in Europe introducing CO2 surcharges. Some other mills are announcing that they will pass a surcharge on electricity and energy cost. And all these things will affect the prices in 2022. As a summary, a lot of uncertainties on what is going to be the price tendency. Taking into account again the added values with which we work, we have to be very careful on our stock positions and a very complicated quarters ahead. This was my part of the presentation. Thank you very much, Kallanish, for the opportunity to share it with you, and I'm open for questions. Thank you very much.